I've seen a lot of gurus teaching you a self-directed IRA strategy that is at best lazy and at worst a total liability nightmare. They tell you to dump all your properties into a single limited liability company. Listen, that is level one. It's a recipe for disaster. If you actually want to protect your wealth, you need to move to level two, separate LLCs for every property. But even that has a single point of failure. Here's what I'm going to do today. I'm going to pull back the curtain on my level 3 and level 4 ironclad strategies using multiple LLCs, self-directed IRAs to hold separate LLCs, and creating a total firewall between your real estate assets. Then what I'm going to do is I'm going to show you how to layer it in complete anonymity so the public and potential creditors don't even know that you own these properties. If you have more than $200,000 in your retirement account and you holding on to rental real estate, you can't afford to stay at level 1. All right, let's get started. Okay, so here's the problem where the level 1 strategy comes in. So let me just put level 1, and this is what a lot of people are doing right now when it comes to investing with their self-directed IRA. I've seen this multiple times. So what they'll do is they'll create a limited liability company up here. So let's say that these properties are held in Colorado. So it's a Colorado LLC. And they'll structure the limited liability company so its single member is this self-directed IRA. So this is the single member. Now you have to do that for compliance purposes. So they set it up with the IRA as a single member. Now they put each of their investment properties into this LLC like this. Now here's where this is a problem. You might think you have asset protection. Let's say I have some cash that's remaining down here that I'm going to use to invest with. But the problem is if something goes wrong with your properties, let's say this property right here is the one that has the issue. Maybe the property burns down because the tenant plugged something into a power strip that created a fire, and then the tenant passed away as a result of it. That family will sue the LLC because it is the owner of that property. And any asset that is in the name of that LLC will now be at risk. Now think about this. This is your retirement account. How long did it take for you to get the money into this account? It's not easy because the government caps how much money you can contribute to your retirement plan on an annual basis. So for a lot of people, it's taken 10, 15, 20 years to get to a point where they have cash that they can go out there and start meaningfully investing into real estate. And then one mistake like this wipes it all out. So you could potentially lose all of these investments. That's why this level 1 strategy that so many people are using is a complete failure in my opinion, because I've seen individuals go through this before where their LLC was sued and it held multiple properties and that LLC was owned by their IRA and their retirement account was put in jeopardy. So let's talk about level 2. All right. So level 2 is slightly different. What we want to do with a level 2 strategy is we're going to use the same concept here of having an LLC to protect our assets, but I'm going to create one LLC per property. Okay, so I'll be using one LLC per property. Now, there's a few people out there that teach this strategy. Not a lot, but I've seen 1 or 2 guys talking about this. And so with the level 2 strategy, what we do is we place individual properties in separate limited liability companies like this. Now, I do want to caveat this with one thing. If you have watched my video on the new FinCEN regulations and the reporting requirements, understand this is not how your plan should look. Actually, what you'll be doing is putting your properties into land trusts to be owned by these LLCs. Now, if you haven't seen that video yet, listen, I've got a link right up here that you can watch that video on how to structure it the way I just described. So I'm not going to go back through that and cover that in detail. Go watch that video. It's important if you don't want your information turned over to the feds to understand what that means. Okay, so now, this strategy, what you're doing here is you're ensuring that if anything goes wrong with one of these properties, again, using my example where the person put too many things into a power strip and it created a fire, then it is just that one LLC that is at risk. The other assets have now been segregated out and they're now protected from this potential lawsuit. So this is sound planning. This is why level 2, that is a very bare minimum was what I would be doing when it comes to protecting my real estate that is held inside of a self-directed IRA. Because again, I don't want any of these assets put in jeopardy because again, how long does it take to get those assets into there? A long time. So we have to be extra careful when it comes to protecting them. Now there's one aspect of this level 2 strategy that I don't care for. And that is the fact that when you're setting up these LLCs, and I see a lot of self-directed IRA companies, when they work with people and they set up limited liability companies, they make this mistake. And that is when they're filing the LLC, of course, they have to list the IRA as its member. Now, when you list the IRA as its member, what you're doing is you're putting that information out there, okay, on a Secretary of State's website. So if anybody looks at this limited liability company here, they'll see that it's owned by this IRA. More importantly, when I say they see that it's owned by an IRA, they'll know that it is your IRA because it'll have the name of the IRA and then it'll say FBO, in case, say it was mine, Clint Coons, for the benefit of Clint Coons. So I don't want potential creditors to know that I have an IRA that owns limited liability companies that in turn owns real estate. You know, if you want to protect your information from the feds and not have to report under FinCEN, then you're using strategies to protect the transfers, but you're going to go ahead and blow it if you set up your structure in this manner right here. And a lot of people who are not watching this video will continue to make this mistake here in 2026. So that takes me to my level 3 strategy. So level 3, okay, is where I think at a minimum everyone should be when it comes to protecting their assets held in a self-directed IRA. So level 3 looks as follows. So here's our self-directed IRA again. Got some cash left inside of there. Now what we're going to do is we're going to start with a Wyoming limited liability company. We first want to set up a Wyoming LLC. Now this Wyoming LLC is going to be owned 100% by the self-directed IRA. Now a little bit about creating LLCs for self-directed IRAs. First off, you never want to do this on your own because that could be considered a prohibited transaction if you're trying to create all this. In fact, watch my next video that I'll be releasing on IRAs about the risks involved in using a self-directed IRA in real estate investing, because if you create a prohibited transaction, you can blow your entire IRA. Definitely, if you're an IRA investor, you want to catch that video. Now, here's what happens. The LLC is owned 100% by the IRA. It's disregarded for federal tax purposes. Okay, so you set up as disregarded. Right? And the LLC operating agreement is drafted with the fact that the IRA is its sole member. So it must have what I call prohibited transaction clauses in the LLC operating agreement to ensure, if you were audited, that LLC meets the IRS guidelines. So it does not trigger a prohibited transaction and blow up your IRA. So any LLC you set up that is owned by an IRA needs to be set up in this manner. Okay, so you set up the LLC in Wyoming. That's the first entity we create. Now, why are we creating that? It's real simple. Anonymity. If I don't want the feds to know that I have real estate and track all my real estate transfers because I think that's private, then why do I want someone to be able to go on to a Secretary of State's website and see that I have entities and reverse engineer something back to my properties? So the way we prevent all of that with my level 3 strategy is to use a blocker entity. And that's what we have setting up here in Wyoming. You're setting up a blocker entity because when you create a Wyoming limited liability company, Wyoming and Delaware, okay, they're like brothers. That is the way they've set up their statutes for the information that is collected on your filings is that all you need to provide is the name of the LLC, a business address, and the registered agent. Nowhere does your name show up as the member or manager or your IRA's information show up there. So when we're creating these, all you see on the Secretary of State's website is the name of the LLC and nothing about the actual owner. So your IRA information isn't going to be out there for public consumption. Now, for the property holding structure, just like we did in level 2, we will create separate LLCs, and each of these LLCs that hold title to the properties, like this, will be owned by this one limited liability company in Wyoming. So all of the income flows down here to your IRA. All of these LLCs are disregarded for federal tax purposes. And of course, since I drew it out earlier, let me put these land trusts here. This is your FinCEN protection right there. All this flows down to your IRA, and there's no taxes incurred. Well, I take that back. Maybe there is. Watch my next video when I discuss some of the problems associated with using a self-directed IRA that you need to be aware of so you're not walking into a tax trap. Okay, so it all flows down here. You have the anonymity. So that's level 3. And I really like this strategy right here because of that anonymity component. Your properties now has anonymity, and your business entities have anonymity. So literally someone looks here, they have no idea about any of this right here. This is the only thing they see, meaning a potential creditor, because somebody slipped and fall on that property. They wouldn't know anything about that. Whereas here, if somebody were to slip and fall there and bring a lawsuit against this LLC in level 2, hey, they're going to know about this company because it's listed on the Secretary of State's website. And if they know about this, then they're going to find out about these as well. Now, why is that a concern to you? Because the more information they have, maybe the more pressure they try to bring to bear on this lawsuit, more threats they could make. I don't want that to happen, so I like to use the blocker entity right here. I mean, I can think of one simple threat that I would make if I was plaintiff's counsel. I would say, hey, this guy has a self-directed IRA. He set up these structures. Here's what we're going to do. We're going to threaten to report him to the IRS that we think he's engaged in a prohibited transaction. I'm going to try to use that as leverage against you to meet my demands. Now, why put yourself in that position? Use a blocker entity. Okay, level 3, that's the minimum then, I think, from a asset protection standpoint that you should start with if you're looking to protect your real estate held inside of your IRA. Now, for some of you out there who are watching this video, you have quite a bit of real estate inside of your IRA or wealth, and you want to take it to the next level. And you're thinking, hey, I want to make sure that I have the best protection in place. Well, that brings me to my level 4 strategy, and I've never heard anyone talk about this strategy. Okay, so level 4. With level 4, what we're doing is we're taking everything and we're putting it off onto its own island. And so what do I mean by putting it off onto its own island? Essentially, what you're going to do is you are going to create separate self-directed IRAs for each investment. You see, when you set up a self-directed IRA or you have an IRA right now, you don't need to roll all the funds into just one IRA. You can roll it into as many as you'd like. So you could have an infinite number of self-directed IRAs. We're not talking about contributing here. What I'm talking about is breaking up your assets. So with the level 4 strategy, the clients that I've worked with on this strategy, how we typically structure this is we will create that Wyoming LLC right here, and it's owned 100% by this self-directed IRA. Now, in that Wyoming LLC, there's a land trust that holds title to the real estate, just like that. And so for each property, we do the exact same strategy right here. Each one is held by a separate IRA. Now, why am I going to this length to do this? Okay, you're going to want to watch my next video in this series on protecting your IRAs about the prohibited transactions, because here's the problem that you have. If you make any mistake with your self-directed IRA, let's go back here and look at level 3. Let's say that I hired my son to go out and paint this house. I just wasn't thinking. And I make that mistake and I'm audited. That one mistake here will flow all the way down to here, and it will collapse this entire structure on you. That's the mistake. You see, if you want to ensure that not only you're protected from lawsuits, but you also have IRS protection, you need to go to level 4. And that's why I think level 4, for those of you who are actively investing, this is your sweet spot. Because what occurs with this type of planning is that if there ever is a mistake that is made with one of these investments, okay, from a tax standpoint, it is only this investment right here that could potentially get punched by the IRS, because it's that one IRA that engaged in the prohibited transaction, not the other ones. So if you want to make sure that you're giving yourself the best shield, the best defense you can, then you want to look at my level 4. Now, yes, there's going to be a little more administrative burden on this because you're going to have multiple IRAs, but then weigh that against the benefits. If you're an active real estate investor, if you're self-managing your own property, you ought to be considering level 4 for your protection. Now, here's something else to think about as well. You've heard the term piercing the corporate veil. Well, over here, if someone were to, well, this is pretty darn messy, but let me try if I can clean it up a little bit here. If someone were to pierce the veil of one of these LLCs here, it gets them down into here. And if they pierce this, they're down into here, or at least they're here, they may be up into here. So if you want to make sure that you're cutting all that stuff off, then by using this strategy, again, if something were to happen here and they pierce the veil of this LLC, it brings them down to essentially an IRA that's only been sitting on the rental income. And, you know, one of the things that I've told people before, because I've dealt with clients that have had a multi-family property in a structure like this that we created for them. So listen up here. This may be of interest to you. Let's assume that you have a multi-family property and it's held inside of this LLC. And that multi-family, that LLC, is owned by your self-directed IRA. Now, this asset that you hold here performs really well. Let's say it's throwing off annual cash for you of $60K a year. So that $60,000 is flowing down into here. Right now, in 4 years, or say 8 years, you're going to have $480,000 in cash sitting there. So when I run up against this, what I tell individuals in this position, I say, keep as much as you need for CapEx that you think may come up with this property. So maybe you're thinking, I'm going to hold on to $60K for capital expenditures in here. So if I need it, I can move the money back up and repair some stuff. Take the remaining $420,000 out and do a rollover to another IRA, another self-directed IRA right over here. So this self-directed IRA becomes your piggy bank, your cash funding IRA. And then when you're ready to move beyond that, you can start taking these funds, again, move it to a separate IRA over here. I'm running out of space. Separate IRA over here, and then that one can go up and do this strategy all over again. So you'll see that this stays static, and it can be taking rollovers from these other accounts as you need to get that, draw that cash down so it doesn't continue to accumulate inside of there. You know what I'm going to do is I'm going to give you one other bonus strategy here for this. So if you are investing in an IRA and here's my self-directed IRA. Let's say you're starting out. So this is for those of you that have watched all the way to the end here. Here's some bonus content. It's about how you can structure some deals. If you want to get into real estate, but you don't feel you have enough cash in your IRA, well, you can partner with someone else. You can partner with their IRA. Maybe your spouse has an IRA. You can partner with them. So in this structure, what you do is you each have your own self-directed IRA like this. And what we can then create is an LLC up here, just like I shared with you earlier, and you can use this LLC right here to buy the property. So we can contribute cash. So let's say that this one has $50,000 and this one has $50,000. So you'd set the LLC up at 50-50. So each of them are equal owners, 50-50. We would move the cash in. Now we have 100. Then we go out and we buy our property, just like this in the LLC. So this strategy right here is what we call a joint venture self-directed IRA strategy right there. So when I put on here was 2 IRAs. That's one option. You can also partner with other people. So if you have the opportunity to get into a deal with an individual, as long as you keep the percentages clean, and that, listen, do not do this unless you seek out advice, because it's technical and you can trip yourself up. But I want you to understand that there's options there, because a lot of people want to invest in real estate with their self-directed IRA, but they don't have the cash. So maybe it requires a partnership deal with someone. So let's say I have this person over here, a fellow investing friend. You could do this. He could come in with his cash, you come in with your IRA, you could still do the IRA deal. There's lots of different ways we can run from off of this base structure here. What I'd suggest you do is set up a consultation with us here at Anderson, and we can help you with that in designing this out. Listen, building a firewall between your assets is the only way to truly sleep soundly as a real estate investor who invests with a self-directed IRA. And if you want to see a visual breakdown of how I layer these accounts for total anonymity, comment GHOST below and I'll reply with my multi-account setup diagram. So you can use that as a guide to set up your own structure like I just diagrammed out for you in this video. And be sure to catch my next video in this series, why one mistake could cost you your entire IRA. Listen, if you're an IRA investor, you definitely want to be aware of the prohibited transaction rules, as well as what the IRS could do to your IRA if you make a mistake. Be sure to hit the like button and subscribe to my channel so you'll get notified when this video drops within the next week. Take care, and I wish you the very best with your investing.